Hey Dale, can you hear me?
Yeah, you overslept today, didn't you? I know you. I hope you had a cup of coffee because I'm going to grill you now.
Oh
No,
God.
I'm
Yeah,
kidding.
I know.
Anyway, Lydia, thank you for being here. And I'd like to open it up with, everyone knows the reasons why to be bearish. The pound, Brexit, done deal. Can you think of anything fundy wise with everyone being so bearish that could trip them up, that could be a positive? You have, I think, more cable bears than euro bears. And we had a nice little lift the day before. Oh, it was yesterday.
Yeah.
So, anything you're seeing fundamentally that could shake the bears out of their short positions here?
Short, pound.
Yeah, anything that could shake the bears out of their short positions in pound fundamentally that no one thinks is possible.
I think I don't think fundamentally anything has changed that would shake people out short bears. I think right now it's really technical. We hit
Okay, fair enough.
major support levels, really across the board, but in cable in particular.
Okay,
Yeah, I just think it's more of a technical move, profit taking after another long leg down.
okay. I think we're closing higher on the week after making new lows. You make anything out of a weekly reversal to the upside? And it doesn't mean anything to you?
For me, no. For me, it just means that we're going to a much deeper correction. So I see that we've corrected all the way back up to $1.20 above $1.25.
We could go to 28 again, your dotted blue line.
Yeah, this is actually only
See,
127.
that's a nice candlestick. It's not
Yeah.
as strong as the one near the end of last year at
Hmm.
these levels, but I don't know, maybe it's just a hope candle for people. But anyway, I was wondering if you think it's worth play for the long side, buy a break and look for this correction to extend higher.
You know what? I wanted to see that we close higher. I wanted us to see if we close at this support. This support level is 126.34,
Okay.
and we're already turning around
Yeah.
at 125. At this 125.50 is probably 125.50 today. So I wouldn't get too encouraged about a reversal higher. I think we probably could go a little bit higher probably going into next week as people start to gear up for the Fed,
Okay.
and start to anticipate the Fed. So yes, we could see a run up. I think we can move into this support. If we can go back to 127.75, that's a huge. That's the real line in the sand. At
Okay.
126.74 is more one of our support level, but this is the real big one at 127.75. It would be a reversal of this entire leg, and so you can see a lot of people start to get pound bullish. So I would
Okay.
just be careful of that. Getting too exuberant with bullishness in the pound. Kind of check to see what it's doing against the dollar, because right now I think folks are now getting closer to the Fed meeting on the 31st.
What are you looking for from the Fed? People are
Um,
all over the map.
yeah, people are all over the place. So I presume that we will get a rate cut. I think finally, they've been signaling it. Every Fed talk, every Fed speech we get has been mentioning it. So we'll finally get that. I think it's only going to be 25%. I'm sorry, 25 basis points. If we get
Okay.
50 basis points, I don't know that they would cut again in September. I expect to see back-to-back rate cuts as opposed to 50 basis points.
Okay.
Hold on.
Okay.
But
All
there
right.
might
And do you think that is going to be dollar negative, just short term, or maybe dollar negative for just the day? Is it going
I
to be a
think it's
short-lived
yeah,
thing?
yeah. I think it's a buying opportunity.
Okay.
What I think in the dollar.
Okay. So a
We
shorting
probably
that'd be a
trading
nice
in
shorting opportunity in cable.
correct. Yeah.
Okay. Okay. Very, yeah, insightful. Why don't we shift to Euro Pound? We made new highs for the move and turned lower on the week aggressively. Interested in your support levels underneath the market because I still believe in, even though I'm trading a counter trend, that there's more left to the upside. I'm just wondering
Oh yeah.
what you think we could pull back to support zones.
Yeah. So right, 89.50 has been that grind out area. So we're
Yeah.
back down that way. If we could break below 89.50, these would be my levels that we would pull back into. Of course, 88.50 is the support, but then right under it we have the Fibonacci numbers,
Okay.
or Fibonacci levels.
Okay.
So 80, 88.37,
Yeah.
87, 70, 80. So 87 is the real
Yeah.
level here.
That was a huge pivot.
Yeah, I don't think
86.50
anyone
to
should get
87.
surprised about that either. A deep pullback like this. I mean, we've been grinding high for, I mean, I think this is 12, 13 weeks.
Yeah.
The RSI has been tapering off as we've been grinding up higher.
Yeah.
So that's been telltale. And we've just been waiting for this reversal. I mean, not reversal. We've been waiting for a real correction. Everything's been so shallow. We've been waiting for a real correction in the euro pound. So I think we can get a deep correction if the pound really starts to see a lot of profit taking, particularly here in the euro pound. I mean, you know, we've
Yeah.
found back to that 90.50, which is kind of that blowout level.
Yeah. Last time you were on, Lydia, you said the euro's the only thing that's stronger than cable. So so the winds have shifted for maybe a few weeks or so.
I hope so for this in this particular pair. Like I said, I like corrections. So I
Yeah.
like anything that can actually give us a healthy correction and make you feel good about the trend again, because I think the euro pound can move higher, but it needs to have this correction. So we need this break right now. It's testing 89.50.
You know what? I needed it too. I've been short.
Oh, have
So
you?
not only the market needed it, but people, my account and people that work with me needed it. So thank you, Lord. All right. Anyway, the yen had a negative week, but it's showing a little bit of a heartbeat. And I look at the yen and gold as a pretty good correlation. And I'm not sure this is the low in the yen, 78.6 back here, but it makes me think that there could be something happening on the guppy. So you're there. What are you seeing? Nothing yet, huh?
No, yeah, it's just a continuation lower.
Yeah.
Zoom in on this daily chart. Yeah, this is another one that hasn't really.
Look at that glaring divergence, Lydia. It looks like a 3 drive. Yeah, that's pretty glaring.
Oh yeah.
So it's we've had 2 lower lows and 2 higher lows in RSI here.
Yeah, that's a glaring divergence on the daily as well.
Okay.
So this is another one that's moved basically in a straight line.
Right.
A straight line down.
So maybe we could get a fib retrace here from some level.
Yeah.
Oh, okay.
That's why it would be key for folks to look at the crosses to see if the pound is really is gaining strength, right? Because we'll see dollar weakness take the pound higher there, but then don't get too over exuberant with pound strength. You want to take a look at the crosses to see if the euro yen is dropping, if the pound yen is lifting, because the pound yen and the euro yen have been 2 of the currency pairs that have practically moved straight down. You'll see the other crosses as well. So pound strength has always been dubious. We've gotten really great corrections against the dollar, fib corrections against the dollar. But then everything else, all the crosses have been just moving basically straight down.
Especially against commodity currencies, right?
Yeah, you've seen we've seen that there too. The Canadian dollar, I think in particular,
home run ball
has really just fallen off a cliff here. And so here's one that's oversold. We don't have divergence in the euro with the momentum. So that's why I don't think that this is pound strength. I think it's more profit taking from some of these straight moves. Like we've moved from support to support to support.
Yeah.
I think this is some profit taking. I would, if next we could see follow through even higher, I think that would be great to kind of reset momentum and to get us into some really decent corrections. But everyone gets caught up in the pound dollar and think there's strength in the pound when we're really just seeing either dollar weakness, we're seeing positioning ahead of the Fed, but we're not seeing real strength. So I think this is the first time where we've seen a pop really in the pound, or I've seen a pop in the pound on all of the currency pairs, on all the pound pairs. So it's like, okay, this is really has to do with the pound, but I just think it's profit taking because we see everything really at these
Extremes.
Yeah, and these extreme.
I really like the way you're, you get a feel for the pound. You look beneath the surface. Is this pound weakness against a dollar? Is it pound weakness across other instruments to give you a bias for the pound itself?
Right. And then it helps to see if there's any laggards. So instead of chasing one pair, like the euro pound in particular, instead of chasing that one, you can get a kind of go look and see, okay, maybe I can catch a move somewhere else. And catching moves for me has really been the dollar. That's the only thing that's really given us corrections, where you can get a nice setup if you're using the Fibonacci levels. Everything else has been really moving from support to support, which tends to work out only if we're in a strong trend like we have been in this case with the pound.
Okay. So if we've covered cable, I know you're an RIA. So RIAs are directing people's funds in the market. Maybe you have some views. You're reading my mind right now. And what are you pulling up here? The spiders, S&P.
Yeah.
Okay. So what are you thinking in here, Lydia? Maybe it's would it also be a great opportunity? I know as an RIA, I don't know, do you ever recommend negative or bearish positions through ETFs or funds if you see the potential for a pretty good drop?
So we'll express like a negative view in the market either with some profit-taking selling or with like just trying to enter new positions and properly enter new positions at corrective or at dips or at correction. Level.
Okay.
That's how we'll express negativity. And I haven't been negative since we've gotten above the support level. So back here, I haven't been negative since that.
Would 2960 being taken out change your mind?
No, it would have to be, we'd have to take out 2800.
Okay.
Yeah, we'd have to take out, we'd have to take out 2800. Anywhere in here, I might change my mind. Maybe if we got a new low back into 26. But I don't even know. 2800 would have me say, oh, okay, I'd have to watch this low. This low would have to hold if 2800 couldn't hold. But otherwise, there's little reason to be negative in stock markets. Very little reason. Last time we spoke, and a lot of that has to do with central banks, not only just being in the market, but just even the complete digitizing of our exchanges now, where you can put on this, they call them circuit breakers. They call, pulling the plugs, whatever they can do. I doubt that we'll see central banks allow stock markets to be, to be healthy again.
Okay, well, the miners have been meteorite, and the bonds have, pulled back a little bit.
Right.
Any views on bond funds or miners or gold or energy? Do you diversify in sectors for your people, or is it just more of a general, what kind of funds do you go into?
Yeah, it's more of a general view, and then we do individual stocks. But for bonds, we definitely do bond funds. So I watch bonds through the TLT ETF.
Me too. So what are you seeing here?
I honestly, I see the TLT moving higher. I think we can still move higher from here. I think these corrections are just, fine. You can see this is just a nice leg down. We barely got to the 38.2, which is bullish in my view. if we, so just watching these highs, watching 130 really, like for price to be above 130 and then we can move higher. But I'm still bullish on bond prices. It's a cut, so yields. We'll see what yields do. Will yields turn around and actually fall? I know yields haven't really been falling alongside rate cut expectations, and the Federal Reserve is effectively the hawkish central bank. I mean, because they've just been talking while everybody else, and the Bank of Canada probably more hawkish than them. So they've been talking while other banks are still having interest rates or cutting aggressively. We saw the RBA with their back-to-back cuts with the RBNZ. They're dovish. They might cut. It's central. I think the Federal Reserve, they're concerned. I don't think they're concerned about a strong dollar, and they're not concerned about inflation. They might be concerned about employment. They might be seeing some stuff that we're not seeing. So I do think we'll get a cut, and then we'll see how yields respond to that cut, and then we'll see what bonds keep doing. But I'm still bullish on bond prices.
I favor of either way. I hope the Fed goes a half and TLT makes a marginal new high. I would short it. I also think that there's a potential that this is a failing rally here in TLT.
Yes.
And under 130, what would be your level?
Let's see. Under 130.
I know that these are more macro positions for you. You're not trading them for your people.
Right.
But I like your technical eye. So I only bring you on selfishly so I could get all your all your levels, Lydia. People think I do it for the community, but I'm really a self-centered son of a bitch.
That's all right.
All right. So anyway,
3850 would be that level. The former highs back in 2017 highs.
Yeah.
Oh well, that's not 2017 highs. They're actually the bounce here. But but that would be. And that's also right around the 50% fib of this latest leg higher. Yeah. So
that would really be a mind blower that people wouldn't understand that the Fed is easing. They control the short end of the market and longer term yields rise while the Fed is easing. I think that'd be one of the biggest surprises this summer.
I agree with that.
Yeah. So why don't you show people how they could follow you and take advantage of your great eye, my trading warrior sister, and your views and your demeanor. You have a great demeanor for teaching. And so, I could tell you're more patient than me. Most people are.
You get high praises too with your teaching now.
But most people are, Lydia. So it's no real high bar for you to have achieved that. But yes, why don't you tell people about what you do and how they could hook up with you?
Sure, thank you. So yes, I'm a trader, but I'm also an investment advisor, and I work with many different kinds of investors. And I also coach and teach for any newbies that are out there and wanting to get more of I'm going to say a classroom setting, but it's more one-on-one with somebody with me. I teach varying levels. So newbies, I have a course right now that is a 6-week course, meeting twice a week. We do one-on-one, we do hangouts, and we go through the charts, and I really give you the foundational tools and foundational skills. For my hope is that you'll build on that, and we focus really on the charts. We focus on charts and price action and momentum. We don't do any kind of trading at all. That's kind of the next course. So you can learn with Lydia is the class that I'm doing right now with theprofitroom.com. But stay tuned. At the end of the summer, I will be releasing a packaged digital course so that people can have recordings. I don't record any of my sessions. So if you wanted recordings and you wanted videos and some people, so you can go back and learn, go back, rewind, and things like that, follow along.
Great idea, Lydia.
The summer. And so then with that, I'm also packaging that with a mentorship too. So be on the lookout for that. That's coming at the end of the summer, just for those of you who want to have something, particularly it's geared for newbies, but if you just want to have something that you can refer to and go back to over time and not, or do it on your own time, this is, I'm hoping this will be a helpful alternative for folks. I know folks in other time zones. I'm on the Pacific. I'm on Pacific time zone, so I think folks in other time zones, it's been a challenge to meet with me. So I'm hoping that this will be another alternative. And then I'm relaunching the coaching and the mentoring. So that's all coming at the end of the summer. And then if you'd like to invest with me, you could click on Invest with Us and learn a bit more about the RIA, the advisory firm that I do, and get in touch with me about how to how we actually do our services there. We do more of a custom approach, so it's not really hedge fund style at all, where everyone's in the same trades, but we really do customize portfolios according to your goals and pick investments that will work, that will get you to your financial objectives. So that is the RA. So I like to say that everything begins and ends on the blog. It's faithmightfx.com. You can follow me on Twitter and Instagram at faithmight, and catch me in social media that way.
May you have the summer of pips,
You
Lydia.
too, Dale.
Okay, and and the summer of love.
Okay.
It was 1969, the summer of love. Anyway, Lydia, thank you so much for showing up, and
Thank you for
for
having
me
me.
now to know where to cover a lot of my positions. I wrote all your numbers down, and
Cool.
well,
It's available pretty soon, so everybody you can come back and watch and take all my levels.
Okay. All right. Well, thanks, Lydia. Have a great weekend, and thank you so much for stepping up and being one of our favorite guests on Face.
Thank you for having me so much.
All right, Lydia. Okay, everyone. That's what. Hope everyone had a great week between Blake's metal calls, Euro Pound, everything else. Do your homework over the weekend. Remember, most of all, don't just count your pips. Count your blessings. Tell the people in your life you love them. Speak it out. They're not mind readers. And have a great weekend, everyone. And we look forward to helping traders again next week. So adios and enjoy your weekend. Thanks again, Lydia.